Hey guys, wanted to review a trade I had yesterday. This was on the SPY, and I wanted to just review this. One thing to keep in mind, and one thing that I've kind of learned here in the past couple of years is really when the market's below the 21. So SPY, the Q, the futures, the YM, everything's looks pretty weak, and the sectors are pretty weak. But whenever the SPY and the Q are below the 21, I usually lean towards just trading the SPY and the Qs. One, for liquidity, and two, volatility. Um, you're going to have a ton of that between the SPY and the Q and the overall stocks, but it's a little bit tougher, to kind of trade market sector stock when the SPY and the Q's below the 21, just because everything's so volatile. But if you've got that movement from the SPY and the Q, you can find some pretty good trades to make during the day. So here's a quick review of the SPY. So this was yesterday. Um, so if we go back, if we look at the SPY here on the daily chart, like I said, in order to grow, what I found, in order to grow a smaller account efficiently and pretty risk averse, you want to trade on the 5 and 15-minute charts at key levels. So you can see here yesterday, this green level, like I've said before in my previous videos, the green levels is a weekly chart. The SPY was at a weekly level, so I was watching it all day yesterday for some trades, and so you can see that same green lines here. The SPY came down around 9:30 Mountain Time, so my time, came down to that weekly level here, and right, there's a couple things I guess I wanted to discuss. Came down to the line, so I wanted to watch for a candlestick or a candlestick pattern at this line to see when I could trade it. And these two candles here, essentially what this is called is a bullish engulfing candle. So this candle basically engulfs, right, this red candle here. And that means the stock will probably more than likely be headed up. So I traded this key candlestick pattern at this level. I ended up buying probably right around the top at around 470 or 457.80, and then I ended up selling it around 458 and some change, so right towards the top there. Now the reason why I sold it there is if you go back to, let me just draw a line in so you can see a little bit more clearly, but I'll just draw a quick line in here, and uh, I'll make this like black or something. All right, so this black line, if you go over back to the pre-market, so you can see around pre-market hours, this was a key support level, and then it bounced off that support. So I basically traded from here, back to that support level, and then I seen that this is kind of a inverse pin bar, or you can say this is like a gravestone doji. This came up, and so to me that was resistance, so that's why I got out of the trade. This was quick trade. You can see 5-minute candle, it was 510, like about 15 minutes, but it was a 15% return. Um, so that's one key aspect. The other thing is, if you look at the squeeze here, if you've got your TTM squeeze pulled up, you can see this. There was a squeeze here, and one of the biggest things too is when you're trading on these time frames, these 5 and 15-minute time frames, look for divergence. So you can see that the selling pressure subsided, and then it started weakening, right? So those yellow lines got smaller. So that, along with the candlestick pattern at a key area, is a good setup for a good return. So if we go later on in the day, you can see it was kind of milling around this 156, right, 156 and a half level for a little bit, and then once again looking for a good pattern off that level. Here we have another bullish engulfing candle. You could have gotten in here, and this was actually a better setup, 457, and you could have rolled that all the way up to 458 and some change right at the support again, and got out for a good return. That was probably a 30 to 40% return there. What made this a better trade was, and the only reason why I didn't trade this is because I was running around later on in the day and I wasn't near the screen, or I would have caught this. But anyways, what made this a better trade, as you can see, it squeezed. So that was key. But the biggest difference is you had buying pressure coming in here as the squeeze was releasing. So if you go back here, this was squeezing, but there was still selling pressure coming in. It was just releasing here. And so that's what made that trade go back up. But here it was squeezing and there was buying pressure coming in, and it was already above, right, that midline. So that's what made that a little bit more substantial trade for you to trade. And then you can see it came back down and ended up closing below that key level. But it was back and forth all day. But those are two nice little trades you could have had off the SPY that day. And like I said, SPY is volatile, super volatile. Qs is volatile. So that's why you want to be careful trading these ETFs below the 21. But there are some good setups. You just got to be patient. So that being said, hopefully you made some good trades this week. You mitigated risk, right? And grew your account. The two most important things we need to do as traders. So if you got any questions, comments, concerns, you know what to do. Hit your boy up. It's been real. Please like and subscribe to videos. Definitely trying to grow the channel, so I would appreciate any support you guys can give me. And yeah, so that's all I got. So good luck trading the rest of the week. Talk with you later.